All right, let's dive into something we all do all the time.
Yeah.
Right, paying for things, but we don't really think about it that much.
Huh.
It's just kind of there. But you send over some really interesting stuff about like the whole history and the future of payments and all that, based on that book. What was it? The Payoff.
Yeah, the Payoff.
Yeah.
It's been pretty fascinating digging into all this stuff. You gave me this whole stack of articles and reports and things going all the way back to like bartering, the really early stuff, all the way up to like, digital currencies and global like financial systems. Wow. So I guess our goal here is to kind of like pull out, the big takeaways, right? Show everyone how all this stuff works behind the scenes. I mean, it's more complex than you think, but we don't want to like, overload anyone, right?
Right. We'll keep it digestible. But yeah, I mean, there's some really surprising stuff in here. Like why are there so many $100 bills floating around? And like, where did credit cards actually come from? The real story, not the myth. So yeah, get ready to see something you do every day in a whole new way.
Okay, so right off the bat, this book, The Payoff, it compares payment systems to like, the essential but kind of invisible infrastructure, right? Like plumbing or electricity. We use it all the time, but we don't think about how it works until it breaks, really.
Right. But payments, it's way more complex than that, right? It's not just pipes and wires. I mean, it's constantly changing. I mean, think about it. Like 10 years ago, who was tapping their phone to pay for coffee?
Yeah, exactly. And the book makes this point that every time you choose how to pay, like tap your phone, swipe a card, even just using cash, it has these ripple effects, Yeah. Like it affects who makes money, who has control over these systems and ultimately, our whole financial future.
It's kind of mind-blowing when you think about it. Like my little, $5 coffee is part of this massive global system.
Yeah. And one of the things the book points out is like how hard it is to actually get hard numbers on some of this stuff. Like take cash, for example. I mean, it's the most basic form of payment, right? But there's really no reliable data on how much cash is out there or how much of it changes hands every day.
It's almost like this hidden world, right? But then you look at something like Bitcoin and it's the opposite. Like it's all out in the open on the blockchain, but it's also anonymous. So it's kind of like transparent and opaque at the same time.
Yeah. Exactly. And because payments are so essential, they attract, criminals, right? The book has some pretty wild stories like, the Die Hard movie where they're trying to steal all that money. But then there's real life stuff like that time hackers tried to steal $1 billion from Bangladesh's central bank, through their account at the Federal Reserve in New York. I mean, talk about high stakes.
Wow. $1 billion. That's insane. I mean, it sounds like a movie plot, but they almost pulled it off. Right?
Yeah, they got away with about 80 million. I mean, they timed it perfectly, right after the weekend in Bangladesh, just before a holiday in the Philippines where the money was supposed to go. And then they tried to cover their tracks by like disabling the system that printed out transaction records. I mean, it was sophisticated stuff.
Well, it's scary how good these guys are getting. But the book also talks about like what happens when payment systems break down, right? Like during wars and stuff.
Yeah, like during World War II in the Netherlands, they had this whole underground economy based on bartering, trading goods and services. They even had like their own secret banks and clearinghouses. And then in Ireland in 1970, they had this huge banking strike. And the economy kept running because people just kept using checks, even though they couldn't be cash.
Really? They just kept writing checks. I mean, how did that even work?
Well, it was basically this temporary form of money, people trusted each other and they knew that eventually when the strike was over, they'd be able to settle up. And then the book even talks about Papua New Guinea during COVID when cash was scarce. People went back to using, what are they called?
Taboo.
What are those? They're these strings of marine snail shells. They've been used as currency in some parts of Papua New Guinea for centuries and they came back into use during the pandemic. It's really fascinating.
So it's like as long as everyone agrees on something, it can be money, right? Whether it's like paper or gold or even snail shells. And speaking of gold, I was surprised to learn that most gold doesn't actually move physically anymore.
Yeah, most of the world's gold is just sitting in vaults like at the Federal Reserve in New York. When people buy and sell gold, it's mostly just changing the ownership records, And the book also explains how banks create money, which is Kind of wild.
Yeah, I was a little confused by that part. Like, how do they just create money?
Well, think of it this way. Let's say you need to borrow $100 from a friend, right? Your friend is the bank. They don't necessarily take $100 out of their wallet and give it to you. Instead, they just write down that they owe you $100. That's a deposit in your account. And at the same time, they write down that you owe them $100, plus interest, of course. That's the loan. They've just created $100 basically out of thin air by making these entries in their books.
It's like magic almost. But then there's this whole thing about liquidity, right? Like having the right kind of money when you need it. I love that story about the Dutch finance minister who needed a 10-cent coin to make a phone call because all the paper money had been withdrawn to fight inflation. I mean, if the finance minister can be short of cash, anyone can.
Yeah, it's a good illustration of how important liquidity is. But it comes at a cost for banks. Money sitting in accounts isn't earning interest, and they have to hold reserves, which ties up capital. And the book even talks about how negative interest rates in some countries mean that holding on to cash can actually cost you money.
Wow, so it's like this balancing act,
Yeah.
right? But it all comes back to agreement, doesn't it? Like what we use as money is what we all agree to use as money, whether it's, bank accounts or digital wallets or cards or even cash.
Exactly. And then the book gets into this really interesting puzzle about high denomination banknotes. Like the Swiss 1,000-franc note, which is worth about $1,000, or our own $100 bill. I mean, did you know that $100 bills make up like 80% of the total value of all U.S. dollars in circulation?
80%?
Yeah.
That's incredible. I mean, where are all these $100 bills? I never see them.
Well, the book talks about how cash, especially large denominations, is attractive for, illegal activities, right? Tax evasion, drug trafficking, that kind of stuff. It's anonymous and portable. Although it's kind of funny that studies have shown that $100 bills actually have fewer traces of cocaine on them than smaller bills.
Really? It's interesting. So maybe they're used more for like big transactions, the kind of stuff that doesn't involve, street level drug deals.
Maybe, yeah, but it makes you wonder about the future, right? What happens if we go cashless? Could the financial system even survive?
I mean, I guess central banks could just create money digitally, right? Like they're already doing that to some extent.
Right, like during the pandemic when they were, pumping money into the economy. But the book does bring up some concerns about a cashless society. Like in Sweden, where cash use has really dropped off, there's this cash rebellion movement. People are worried about privacy and what happens if the system crashes.
Yeah, I mean, what if there's a cyber attack or a power outage or even just a glitch? What if you can't access your money? And there's also this concern about control, right? Like if everything is digital, who has access to your data?
Yeah.
Who can track your spending?
Right, and the book quotes this former Interpol president, Bjorn Eriksson, who warned that a hostile nation could just shut down another country's payment system. Like, it's a weapon,
That's a pretty chilling thought.
Yeah.
So it seems like cash isn't going away anytime soon, but the trend is definitely towards digital, and the book then moves on to cards, which is kind of a more recent development, right? I mean, it's amazing to think that 50 years ago, paying with a card was still pretty new.
Yeah, and now it's like 2/3 of all spending in stores, with thousands of transactions happening every second. It's pretty mind-boggling, and the book actually debunks that story about the credit card being invented on the back of a napkin. It was probably more like on a commuter train, actually. But the real turning point was when Bank of America decided to license their Bank Americard system to other banks in the mid-'60s.
So that's how it became this like universal thing.
Yeah, it created what's called the four-corner model, which is basically how most card payments work today. You, the cardholder, want to pay a merchant. Your bank, the issuing bank, provides the money. The merchant's bank, the acquiring bank, helps them receive it. And the card network, like Visa or MasterCard, connects everyone.
And then there's this thing called the interchange fee, right? Which is how the banks make money off of all this.
Right. The issuing bank gets a small percentage of each transaction, and that's how they can offer rewards and stuff. But the book makes it clear that even though the merchant pays the fee, it ultimately gets passed on to us, the consumers, through higher prices.
So we're paying for it either way, whether it's a direct fee or just, slightly more expensive stuff.
Yeah, exactly. And the invention of the credit card really changed our relationship with debt, too. I mean, Bank of America had this idea to combine revolving credit with charge cards, so you didn't have to pay off your balance every month. And that's how we got into this whole, credit card debt thing.
So it's kind of a double-edged sword, right? It's convenient, but it can also be dangerous if you're not careful.
Yeah, definitely. And the book talks about how Bank of America actually launched Bank Americard in Fresno, California in 1958. They just sent out unsolicited applications to people. It was a big gamble, but it paid off. And the book also points out that a lot of the innovation in card technology has been driven by, well, fraudsters.
Like they're the ones pushing the boundaries, and then the banks have to catch up.
Exactly. I mean, think about it. We've gone from handwritten sales slips to those clunky plastic cards and imprinters to magnetic stripes to chip cards. Each step has been about trying to stay ahead of the criminals.
And sometimes the breakthroughs come from unexpected places, right? Like that story about how the magnetic stripe was accidentally invented by a couple working on CIA ID cards.
Yeah, Dorothea and Forrest Perry, they were trying to figure out how to make a machine-readable ID card, and they accidentally warped a magnetic tape with some glue, and that gave them the idea.
It's amazing how these things happen. And then there's Roland Moreno and his Carte Puce, which is the chip and PN technology. Yeah. I mean, he built the first prototype with Meccano parts.
It's a pretty amazing story. And the book talks about how the card networks weren't always on board with these security improvements. Like Visa introduced their signature debit cards as a way to get around the limitations of PN-based debit cards. It was a clever way to expand their reach.
And then, of course, there's the whole world of online payments, which come with their own set of challenges, right?
Yeah, card-not-present transactions are inherently riskier because you don't have the physical card to verify, and that's why those transactions usually have higher fees.
Which, of course, get passed on to us. And then there are those super exclusive cards, like the Dubai First Royale MasterCard with a diamond in it, and the Centurion American Express. I mean, the stories about the concierge service are legendary. Like that time they tracked down Kevin Costner's horse from Dances with Wolves.
Yeah, it's pretty wild. But for most of us, the big change was when Visa and MasterCard started putting their logos on prepaid cards. It brought a whole new segment of the population into their networks.
It's interesting how those prepaid cards have become so popular. And the book points out that globally, debit cards are actually more widely used than credit cards.
Yeah, especially outside the U.S., Europe adopted PIN debit much earlier because they just didn't use credit cards as much. And speaking of errors, did you read about that Oliver North story?
Oliver North,
yeah.
The Iran-Contra guy.
Yeah, him. Apparently, he made a $10 million accounting error with a gift from the Sultan of Brunei. Like the money just vanished because he messed up the account details.
$10 million. Wow. It's kind of reassuring, like even with all this technology, we're still human.
Yeah, we make mistakes. And the book mentions how, until recently, banks in the UK didn't even check the names on transfer orders. You could send money to Mickey Mouse as long as the account number and sort code were right. They finally introduced confirmation of payee, but it's estimated to have cost people millions in fraud losses.
So it's like the system is only as good as the people using it, right? And the weakest link is often us. But it all comes back to agreement, doesn't it? Like a payment method is only good if everyone agrees to use it. And the more people use it, the more valuable it becomes.
Exactly. And you can really see that with mobile payments in China. I mean, they went from a mostly cash-based society to a world leader in electronic payments in like no time. Alipay and Tenpay, those super apps, they handle an insane amount of transactions every day.
Yeah, it's incredible how fast they adopted mobile payments. And it's interesting to compare that to M-Pesa in Kenya, which took off earlier, but with much simpler technology, right?
Yeah, M-Pesa used basic mobile phones and the existing system of prepaid phone credits. Alipay came later when smartphones were more widespread, and their business models are pretty different too.
Like how so?
Well, the Chinese super apps, they want to keep you in their ecosystem, They offer free transactions within the system, but they charge a small fee if you transfer money out. And they're really focused on peer-to-peer payments with those QR codes everywhere.
Yeah, those QR codes are pretty amazing. It's like the consumer is online and the merchant can be offline. It's the opposite of how it used to be.
Exactly. And it's made it much easier and cheaper for businesses to accept payments, which is why card usage actually went down in China.
So it's like they leapfrogged the whole card system almost.
Yeah, in a way. And then the book talks about instant payment systems, which are kind of the next big thing, right? India's UPI, their unified unified payment interface is probably the most successful one globally. It's integrated with all these different apps, and it's processing billions of transactions every month.
Wow, that's incredible. And the big advantage is that the recipient gets their money right away.
Right.
Right.
Yeah, it's good for businesses because they can, replenish stock, pay their employees, reinvest faster. But it also makes it easier to send money to friends and family. And a lot of countries are looking at India's UPI and trying to learn from it.
So it's kind of like a race, right, to see who can build the best, fastest payment system.
In a way, yeah. But the book also asks this question: who pays for all this? Like, we don't really think about it, but payment systems generate trillions of dollars in revenue globally.
Trillions. Wow.
Yeah.
I mean, I know I pay some bank fees, but trillions.
Yeah, it's a lot of money. And it comes from various sources, like interchange fees, overdraft charges, fees for corporate transaction banking, all that stuff. And globally, the revenue is split pretty evenly between consumers and businesses.
So we're all paying for it, one way or another. And speaking of bank fees, the book talks about how banks make us feel really bad about overdrafts, even though they're happy to lend us money through credit cards and stuff.
Yeah, it's kind of hypocritical, right? And overdraft fees can be really high, especially compared to like payday loans. But the way banks make money from payments varies a lot around the world. In the US and Canada, it's mostly card-related fees. In Asia, it's more about interest margins on current accounts. And in China, it's mostly from corporate account interests.
So it's a pretty diverse global picture.
Mm.
And then there's this whole ecosystem of companies that support the payment system, right? Technology providers, ATM manufacturers, fraud detection services, all that stuff.
Yeah, it's a huge industry. And the book mentions how banks in the Eurozone are having a tougher time cutting costs and going digital compared to banks in the US and Northern Europe. It's partly because of politics and regulations, but also just the level of digital adoption in different countries.
Makes sense. All right, well, let's move on to the dark side of payments, shall we? Fraud. I mean, it's everywhere, right? From those scam emails to sophisticated hacking attacks.
Yeah, the book has some pretty wild stories. Like that Lazarus group, the hackers who tried to steal almost $1 billion from Bangladesh Bank, they used the SWIFT network, which is supposed to be super secure.
SWIFT, what's that?
It's this messaging system that banks use to communicate payment instructions. Like, if you're transferring money internationally, it probably goes through SWIFT. But these hackers, they studied the bank's procedures, their connections to the payment gateway, everything, and they timed it perfectly, exploiting the different time zones and holidays.
Wow, so they were like professional criminals, basically.
Yeah, they were good. And even though SWIFT and the banks have tightened security since then, it just shows how vulnerable these systems are. But it's not always high tech either. The book also talks about this Indian diamond tycoon, Nirav Modi, who defrauded Punjab National Bank using letters of undertaking.
Letters of undertaking, what are those?
They're basically guarantees from one bank to another saying that they'll cover a debt if the borrower defaults. But this guy, he colluded with someone inside the bank to issue fraudulent letters of undertaking, and he got away with millions.
So it's like no matter how secure the system is, there's always a human element that can be exploited.
Right. And the book emphasizes that these payment gateways are always going to be prime targets for criminals. And it's not just banks either. It's big retailers, payment processors, anyone handling large amounts of money.
So when we talk about the payment system, it's really this whole network of interconnected systems, right?
Exactly. And the book has this great analogy for central banks. He calls them the men in black, working behind the scenes to prevent financial meltdowns. They're constantly monitoring the system, making sure everything runs smoothly. Like back in the 70s, there was this bank, Herset Bank, that failed, and it almost caused a global financial crisis.
Wow, so they're kind of like the guardians of the system, right?
Yeah, in a way. And to handle all these huge payments between banks, they created these real-time gross settlement systems, or RTGS. They're basically like digital highways for money. The U.S. has FedWire, Europe has Target 2, and they process trillions of dollars every day.
Trillions. I mean, that's just an unfathomable amount of money.
It is. And the book gives this example of a CHAPS outage in the UK. CHAPS is their system for high-value payments, and when it went down, it caused major delays in house sales and stuff. It just shows how dependent we are on these systems working properly.
And the book also talks about 9/11 and how the Federal Reserve had to inject a ton of cash into the system to prevent a collapse after the attacks.
Yeah, it was a really close call. And it shows how interconnected the global financial system is. Like if one part goes down, it can affect the whole thing.
So we're all kind of in this together, whether we like it or not.
Yeah, pretty much. But let's move on to international payments. I mean, they're kind of a pain, right? They're expensive, they're slow, and it's often hard to figure out what's going on.
Yeah, I've definitely had my share of frustrations with international transfers. Like, why does it take so long? And why are there so many fees?
Well, the book explains that most international payments don't actually involve physically moving money across borders. They use this system called correspondent banking, which is basically like a network of banks that have accounts with each other.
So it's like my bank in the U.S. has an account with a bank in, say, China, and they just move the money between those accounts.
Yeah, that's the basic idea. And most cross-border payments only involve one or two intermediary banks. It's still a complex system, but it's way more efficient than physically shipping money around the world.
Makes sense.
Yeah.
And then there's SWIFT, right, which plays a role in all this.
Yeah, SWIFT is this company that standardizes payment instructions and assigns those BIC codes to banks. It's like the common language for international payments. But the book also talks about how card networks and fintech companies like PayPal and TransferWise are disrupting this traditional system.
Yeah, I use TransferWise all the time. It's so much cheaper than bank transfers.
Hmm.
And their story is pretty cool, too. They were founded by two Estonians who were frustrated with the high fees they were paying to send money back and forth.
It's a good example of how fintech is shaking things up.
Yeah.
But traditional instruments like letters of credit are still widely used, especially in international trade.
Letters of credit, those are those really complicated documents, right?
Yeah, they're basically guarantees that the buyer will pay the seller, but they involve a lot of paperwork and fees. But overall, the revenue from payments is growing fast, which is why there's so much fintech innovation in this space.
Like those neobanks or challenger banks, right? The ones that are trying to disrupt traditional banking.
Yeah, some of them have been pretty successful, but others have struggled. It's tough to compete with the big banks. And then there are the payment giants like Visa, MasterCard, and PayPal. I mean, their valuations are insane.
It's crazy how much money's involved in all this. And the book also explains merchant acquiring, which is how businesses get set up to accept payments, and how new players like non-bank acquirers and payment facilitators are changing that landscape too.
Yeah, it's getting more and more complex. But there are also risks, right? Like the Wirecard scandal. I mean, that was a huge wake-up call for the fintech industry.
Yeah, it's scary how fast they grew and then how quickly it all came crashing down. It just shows that even in the tech world, you can't ignore basic financial principles and regulations.
Absolutely. And then the book gets into this really interesting area, the psychology of payments. Like how the way we pay affects how much we spend.
Oh yeah, I've definitely noticed that. Like I spend way more when I use my card than when I use cash.
Yeah, it's because non-cash payments soften the pain of paying, as the book puts it. You don't see the money leaving your hand, so it's easier to spend. And this effect is even stronger for people who aren't very financially literate, which is unfortunately pretty common.
So it's like a double whammy, right? You're less aware of how much you're spending, and you might not be as good at managing your money in the first place.
Yeah, and this makes the whole buy now, pay later thing even more concerning. Like Klarna, for example. They offer these easy installment loans, but it's basically a way to spend money you don't have.
And it's so easy to get caught up in it, you know. You just click a button and boom, you've bought something you can't afford.
Right. And then there are those Chinese super apps, again, Alipay and Tenpay. They're not just payment processors. They're like financial ecosystems. They use all the data they collect on your spending to offer you loans, investments, all sorts of stuff.
So it's like they're becoming these one-stop shops for everything financial, right?
Yeah, and that's led to this whole debate about open banking, which is this idea that banks should share your data with third-party providers so you can get better deals and stuff. Europe has this regulation called PSD2, which is supposed to make that happen, but it's been kind of controversial.
Like the banks don't really want to share their data, and the fintech companies think it doesn't go far enough.
Exactly. And then there's crypto, of course. I mean, we can't talk about the future of payments without talking about crypto.
Crypto, it's such a buzzword, right? But I still don't really understand it.
Well, the book gives a good overview. It explains how cryptocurrency transactions are verified through mining and proof of work, which is basically a lot of computing power. And it talks about the different types of cryptocurrencies like Bitcoin, Ethereum, stable coins, Ripple, all that stuff.
So is crypto going to replace traditional money?
It's hard to say. I mean, it has potential, but it also has a lot of challenges. Like Bitcoin is slow and expensive to use, and it's been used for a lot of illegal stuff. Ethereum is more versatile, but it's still pretty complex. And then there are stable coins, which are trying to address the volatility of crypto, but they come with their own set of risks.
So it's kind of a mixed bag, right? And the book talks about how countries value their control over their own monetary policy, so they're not just going to give that up to some decentralized cryptocurrency.
Right, and that's why there's so much interest in central bank digital currencies, or CBDCs. They're basically like digital versions of traditional money issued by central banks.
So it's like the best of both worlds. You get the convenience of digital currency, but with the stability of fiat money.
That's the idea, yeah. But it remains to be seen whether CBDCs will actually be better than the existing systems as they continue to evolve.
So it's still early days, right? And the book also talks about this debate between open and closed payment networks. Like ATMs are an example of an open network because anyone can use them. But then you have those Chinese super apps, which are more like closed ecosystems.
Right, and the book points out that it's not always a clear-cut distinction. Like some networks are more open than others, and this is becoming a bigger issue as big tech companies get involved in payments.
Yeah, like Facebook and Google and Apple, they're all trying to get a piece of the pie.
Right, and that's raising concerns about competition and data privacy, and it's led to more regulatory scrutiny, especially in places like China and India.
Yeah, so the landscape is constantly shifting, right? It's hard to keep up.
Yeah, it is. But one thing the book emphasizes is that banks are still really important in the payment system. Even though they're facing competition from fintech companies, they're still the ones holding most of the money and providing the infrastructure.
So they're not going away anytime soon.
Probably not, but they'll have to adapt. And the book suggests that the future of payments will probably be a combination of existing and new technologies, with payments becoming more and more seamless and invisible.
Invisible.
Yeah.
Like we won't even realize we're paying.
Maybe not literally, but it'll be more integrated into our lives. Like imagine paying for your groceries just by walking out of the store, or paying for your commute just by getting on the train.
That's pretty futuristic. But the book also has a bit of a warning, right, about the competition for data and control in the payment ecosystem.
Yeah, it's not just about technology, it's about power. Like who controls the data? Who sets the rules? Who profits? And these are big questions that will have to be answered as payments become more abstract and globalized.
So it's not just about convenience, it's about like the future of society almost.
Yeah, in a way. And the book ends by saying that these philosophical divides and geopolitical battles are going to become more and more evident as payments evolve.
Wow, that's a lot to think about. Well, thanks for joining me.